What I want you to notice is that on the worst day in the market, how everything moves smoothly together in the same direction. So it converges. On days when everybody is suffering, these strategies work their best. It also means on days when it's not melting down and things aren't working as easily, yeah, there's no extra reason to stay in and try to make it work because you know the days like these are going to happen. All right, intraday trading. So this is on a 3-minute chart. Here was the previous day's close. A tiny gap up. It went as high as this and as low as that. And then in the next bar, it broke down below the OR3. So we are short with a standard risk box. Now, this is a case where this is the MMRB. So if I was playing that as a swing trade on 30 minutes intraday, I could use a whole frog box, and then my initial risk would have looked like that on a swing trade. But what I'm doing is taking a very tight stop, the MMRB on the 3-minute, and then if this works in my favor, I can grow that into a 30-minute position, keep the same position size on it, and then at night, convert that back to an overnight risk using the range stat, which means you're selling 80% of your position in order to have the widest possible stop. And then the next morning, when it starts moving, you go right back into the 3-minute and 30-minute battle drill and use the R stat for the overnight risk. So start here if you're doing an intraday turbo, grow it into a 30-minute chart, use that to manage it during the day, overnight risk measure against that, and then the next day get right back into either a 3-minute bar if it's going to be one of your turbo trades, or just go from the R stat back to the 30-minute size risk, which to me is more like a frog box or 3 times an MMRB. And then just manage the wider stuff. Now, what that means is that your 3-minute position for the same number of correct. I'm not using the R stat. I'm using the 3 times MMRB because because I'm working on the 30-minute R captures. That's where the advantage is that you can swing trade on 30-minute bars without the minute by minute heartbeat risk of the 3-minute and the very tight risk, but you get much earlier signals and easy intraday movements on a frog box, which is about 1/3 of the range stat. Because you're using 3 out of the 10 range stat boxes here. You're using 1 out of the 10 here, and then you're using the full range stat for the overnight risk. And that seems like a reasonable way to manage risk in between positions. All right. That's advanced hybrid trading right there, fellas. That's a whole workshop by itself, but you get the ideas there. And I actually want you to suffer with the problems of trying to figure out how you want to compute the R's. I just showed you about 80 to 100 R from the last 2 days. So that's a good problem to have. All right. Meanwhile, intraday turbo for so we had the close here, the OR3, the breakdown, the short, the standard risk. And in the first 3 bars, your risk is out. And just capture at the edge, in this case, captured at the edge of the dragon to lock in this gain against that risk, and that's about 1.5. Standard reentry, uh, SSC, because we have a harsh winter. The R10 bottoms out, uh, enters the dragon, leaves the dragon, breaks the PSAR. So it's long, standard risk. My target now is going to be the top of the R10, which is also identical to the PSAR flip. So if it gets above there, this thing could really go. That means that the space between my entry and that level, this is the tactical trade space in here. And all I have to do in the tactical space is get my stop up above my entry so that I can lock in that little wedge of a gain and calm all my nerves. Failed for 0.5. It breaks through the PSAR. So I treat that as what kind of pattern? What kind of pattern would that be? There's a peak of the R10, peak of the R10, peak of the R10. And then here is the bottom of the R10 here. If I entered in this region, that would be a collapsing dragon. Because I'm entering here, now notice that the dragon is here. You know, I'm just going to color that in a little bit so you can see him. So that dragon is acting like a noise buffer. And he's rolling over. So because I'm entering after it's crossed the dragon, but before it has broken below that, this area in here is the pocket. And so I entered right here on the southern, as it crosses the southern skin of the dragon. So any entry in there is a pocket entry. That feels just like a little pocket before the collapse. It's like a little lee area of momentary quietude as it's making up its mind if it wants to collapse. So, but it has the protection of the dragon in its favor. It has this little noise buffer, and the fact that it's all rolling over gives me a hint that maybe this thing is down. So I can front run all that and get a good fill. And then if this breaks and starts dropping like a rock, I'm not trying to chase the price. All I'm doing there is getting my stop in. So this little entry here is the short, it's right in between the belly of the R10 and that southern skin of the dragon. So this is a sweet spot for entry to the downside. And yes, the answer to the quiz, Kata 2, you could call that a supported fall crossing. Everything's failing, or supported winter crossing. 1R fail. It did not fail further. So that's the consequence of that earlier, when you're trying to front run the collapsing dragon and it doesn't work and it reverses, well, then that hypothesis is disproven. So just eat the 1R loss like I'm supposed to. Collapsing dragon, cover. Collapsing dragon, second position. Whole market is failing. Get paid at the routine place. So when we're wrong, we're small and take small losses. When we're right, or in other words, when we're aligned, we're large. We got two positions for multiple R's. This one is +3. That one is +2. So this is +5. This one is +1. Let's clean that up. So this one's +5. That one's +1. That's -1. This is -0.5. That one's +2. So 5 and 1 and 2 is 8. That's -2. That's about a 6R day, intraday. On a $400 risk per trade, that's $2,400. On a $100 risk per trade, that's $600. Minus your cost of commission, of course. So this one is U.S. Steel. Now, since I can use on U.S. Steel the R10, the MMRB, that is a 10, 20. That's a 20-cent risk. If I was using the swing trade, that'd be about a 60-cent risk, so that I could have something more like this as my risk box. So if you're using that, if you use the like the frog box or 3 MMRBs, you're in that whole trade as one trade, because you never this is all noise in here. If your initial stop was way up in here and you're just trailing it all the way down, that's one position and it's routine.